Good morning. I wanted to just show you what I do when I'm back testing, since a lot of people typically really have their own way of doing it. There's no wrong or right way. The basic point of back testing is looking at your trades for the week, seeing where you could improve, seeing where you went wrong, try not to repeat those mistakes. Um, Really timing in the market, and because these don't print out the actual movement, it just prints out the candlestick on the replay for trading view. um, we just gonna let it do what it do. So what I do is I normally test out the pairs or the currency that I trade or have traded for that week. I trade across the board, so sometimes it'll be indices, commodities, forex pairs. I really haven't messed with Bitcoin. I'm not completely closed off to it yet. I have my routine, so I'm just sticking to it for the time being, especially since I'm trying to get some things tweaked to a little bit of a better position for me with what I currently trade. I'm currently really deep into gold futures and NASDAQ futures. So if you've not traded those, you'll know they take majority of your time if you're trading, and you have to really be in the market with those to know from day to day what they're doing or planning on doing, or to keep up with the news involving them. There's a lot of dynamics when you're trading futures or anything on the primary market exchange. Forex pairs, you can get away with doing a little bit more at a slower pace. But since we are on NASDAQ first, I wanted to walk through what I would do on my back testing for NASDAQ. So generally on NASDAQ, I would look at, if you can see down here at the bottom, that is showing that there is news. But since we're on a huge time frame, which is the daily, I usually zoom down to get the exact time, or just look into trading view in the news section, and it'll give you the dynamics on the hour of when news is supposed to be released for what you were trading. On the daily time frame, I'll also look ahead and see when the contract dates switch up, because that's pretty important. You don't want to be trading an old contract date. You won't have a lot of volume in it, and it really won't serve you the best. So just pay attention to the contract dates when they swap up, and it's usually from month to month or a 3-month time frame. But with that being said, on the daily time frame for NASDAQ, the only thing I want to look at is the genuine bias. Which way are we trending on the larger time frames? For NASDAQ, it's on an uptrend because, as you can see, I have my 50 moving average, and a lot of times on the higher time frame, I'll plot my 200 moving average. But as you can see on my 200 moving average, that it's about the same. So we're trending upwards on NAS, and dropping down to the 4-hour time frame, it looks like we reached some resistance. So I'll mark up my resistance, and this is possibly where we could meet some changes if we were to trend upwards on that side in the beginning of this coming week. So we pay close attention. To me, these are points of interest for me. And there's a swing high here. And as you can see, there's a top here, but the previous high did not exceed, the following high did not exceed the previous high. So I'm looking at this kind of on a trend down from lower highs. So also we have a swing low currently in this range here. So I would mark that up. And it depends on how y'all mark up your chart, y'all. There's no wrong or right way. Just make sure important areas of interests are hit. Because a lot of times the market will do wick fills, things like that. And you want to make sure that you are marking up your charts so that when those areas come up, you'll know what to do. Now, if it breaks below this area, I'm going to start looking for my bias to change to sells. And then we have an area here and here. But see that the moving average is or will be broken if it goes to this area, as well as the next level of lower structure being here. So that's what I would be looking for on NASDAQ. If we go down to the 1 hour time frame, we'll see that the trend is coming to our first area, which is our swing low for support, and it could in the morning grab liquidity and continue up, because a lot of times it'll look like it's going to start trending down or reversing, but it'll be just reversing to close gaps and grab liquidity, and it will continue upwards. For my moving average, the lower I get, I begin to swap down to my 50, because I use my 50 as support and resistance on my entries and exits. So just as a clean explanation on that for me, I will still keep my bias. The trend would have to break below this area here in order for me to change my bias. However, with the current strategy that I'm using, anytime the trend is trending below the 50, I can take sales. So you just have to know when the market is retracing or, not. So you don't want to get in a whole lot of sales. Say, for instance, you get into a sell. It's a short-term sell until you confirm that the trend has changed to bearish. So just remember that you can still trade trends, you can counter trend trade, but just remember, keep your risk really tight and make sure you follow your rules. So we don't know where the market is going, because the last candle here looks like it is not closed yet. But just pay close attention to NAS tomorrow. I wouldn't get in before around 9 o'clock, or at least after the first 15 minutes of open, just to allow it to do what it's going to do. So just be mindful of that with NAS. I'm gonna hop over to gold, because we do have gold here. Let me put my 200 for my higher time frame on for now. And then as we drop down that time frame, we'll go and switch it to our 50 as we normally do. So on gold, it's a little tricky. We're trending upwards still. Gold is still on an uptrend, but as you can see, this area here that was previous support has been broken. So we are in the middle of just monitoring gold. We do have a resistance area on the daily time frame here. And remember, y'all, gold had a run, and it's been running consistently for a very, very long time. It had an area where it was trending up, and then we started trending and ranging, and this is over the years. But if we get up into, pretty much the last 2-3 years, gold has been really making some phenomenal trends to the upside. So I remember when I created a video, I don't know if y'all can go back on socials, but I expected gold to reach here. That's close enough for me. Yeah, 503 is the closest that I can get it. Y'all, look how close gold is to reaching 5,000 an ounce. Look how close that is. That's only 594 points. So yeah, ching ching, So just be really mindful of what I told you there. We could be going down here. I'm not gonna sweat it. I'm really not gonna sweat it. But on the daily time frame, we trended down, and then we got some candles that gave a little bit of a push to the upside. We don't know if it's retracing or whatever, but this previous support over here, let's drop down to the 4 hour and see if we can see it a little bit better. Okay, so see there's some support here. It was previously here, but it broke it. And let's change our moving average to the 50. Look at that. So gold right now is in an indecisive point as far as I'm concerned, as far as directional bias. We do on the 4-hour time frame have a double top. We drop and push down on that double top, consolidated, and we're still pushing down. We need to see if these two are retracements and going to continue to push down, or if it's grabbing liquidity, because see how it grabbed it below the previous low, close, and then the following support level is here above the previous. So it's kind of giving mixed signals with gold. I would just wait until you get a confirmation regarding how you trade and what you trade. But these are still tradable symbols in the market. If you have a strategy for what the market is doing, I know a lot of people say, hey, just do one strategy, stick to it, and don't do nothing else. I understand that. Believe me, it's true, partially true. But I have a theory. I am a price action trader. Price action is what rules the market. So if I am trading price action, and I have several different methods for several different types of movement in the market, it is okay to trade it. That is my strategy, and that is a strategy that I have for that particular move, because I trade price action. But if y'all are strictly on not necessarily price action, but you have a strategy theory is what I like to call it, whether you do supply and demand, whether you do in trend, drawing trend lines, whether you're doing Fibonacci, whatever it is, I call those trend theories. If you have a trend theory and you only have one theory to trade in the market, and it's outside of price action, which is, I think every theory involves price action. It has to a certain extent, but trade what you are comfortable trading. I've been trading a while. I'm comfortable with the dynamics of the market changing and me changing with those dynamics and still being profitable. It is possible, but you have to work your way up, and you have to form your strategy for each type of move in the market. Just wanted to make that point, because if you're new, stick to one strategy. I agree. Don't get confused or wrapped up in trying to be this professional trader with all these things on your chart and you can't even see the candlesticks. Stick to a strategy. Once you get comfortable with how price action moves and how whatever you're trading moves, start to evolve. Because the more knowledge that you gain in the market, that's why it's really important to continue your education. Once you learn something, you don't learn something and stop. You continue to dig and dig and dig. And then as you dig, you'll unfold a lot of other different things that you were not aware of from the beginning. So keep digging. These will help you see the different trends in the market at the different times, like holiday season. This is the fourth quarter. It's going to be different than the first quarter. First quarter is going to be different than the second quarter, and so on. So make sure you are tailoring your trading to what works for you. I cannot stress it enough. There's not one right way. There's not one wrong way. Whatever you are profitable on, and whatever you can actually understand and explain, if you can explain why you're getting in a trade and you execute that trade according to your plan, there was nothing wrong with that. If the trade goes against you, guess what? You followed your rules, you stuck to the plan, it just didn't work that time. And guess what? Because of your wonderful, amazing risk management, you can live on to trade another day. So that's pretty much all I wanted to go over with you all on Gold and NAS. This week is the week of the beginning of a new month. I hope y'all killed it in October. I hope you had a wonderful and safe Halloween. I hope this month and next month can reveal some phenomenal things in y'all's trading. I am rooting for you on this end. So if you're getting discouraged, if you've reached a point to where your trading is just not working and you want to take off for the rest of the year, that's amazing. That's an executive decision, because remember, we're supposed to treat trading as a business, because what? It is our job to do and make this so that it makes what it needs to make for us and our families. If you're in trading the right way, it can do some phenomenal things in your life. So just stay focused and keep going. Until next time.